Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for January 18th, 2008. Well, here we are again on this Friday, and we're again talking about a down market. Now, those of you that know or have been through bear markets know that this is essentially what this seems to be at this point. Now, bear markets do have bounces along the way, and at this point today I will say that I do expect a bounce next week. I don't know if it necessarily will be on Tuesday. I don't know exactly when, but it's getting to the point where the markets are in need of a bounce. We might need one more flush out. I'm not sure. We might have already gotten that over the last couple days, or we might need that for one more day or one or two more days. The VIX now is approaching 29, which is getting up there and telling us that possibly we're nearing that area where we could see at least a near-term bounce. So we are following that VIX index, and the VIX is the volatility index, and it can give us a little insight into how much panic is in the market. And the way you trade that normally is you trade it contrarian. If it gets above a certain level, you look for a rally in the markets. If it gets below a certain level, usually a fall. And that's what we're following here, among many, many other things, to give us some technical ideas about the market. Now, let's take a look at the ES today, and I'm going to go over the indexes quickly here about what they did just to give us a general sense. The S&P was down about 8 points, the Dow was down 60 points, and the NASDAQ, which was stronger than the other indexes, and we'll cover that quickly, was down only about 7 points. Now, the interesting thing about this is that we started the day looking like we were going to have a great rally. The futures were up huge pre-market. Everyone was excited about AMD's earnings. IBM, which officially announced yesterday as well with AMD. These earnings were relatively great all across the board, and the NASDAQ was roaring early on, as well as the futures. The S&P, the E-mini futures were up huge as well. And we'll look at the intraday chart here to give you a sense of that, and you can see up here, I mean, we're very high here. This is a high move up here, where the S&P futures are upwards of 15 to 20 points higher, which for the S&P futures is quite a move. Now, what happened? That's the question. Well, those of you that know yesterday, we talked a little bit about expecting Bush to come out here and give a little telltale sign of what the stimulus package that he's trying to put together is going to entail. Well, he did that today, folks, and the market was not happy. The market was not happy one bit with the stimulus package that he didn't really divulge. And I listened to this on TV. I saw the whole thing live, and frankly, he didn't say much. It was... I mean, everyone went in expecting numbers. We had heard rumors that it was going to be $800 per person in a tax refund to try and get things going, and all this other jargon we had heard about, or rumored about, I should say, and frankly, it was nothing. He said, you know, we're trying to do this. This is what it's going to be. We're going to try to do it as quickly as possible. Done. And that was it. Well, the markets did not like that, needless to say. The market needs concrete things right now, and I think it's ludicrous to think that the market's going to rally on him just getting on TV. We're not in the type of bull market we were, where every time he came on TV, the markets would push higher. We're in the opposite market, where now anytime someone gets on the TV and doesn't either cut rates or say something about a definite refund or something specific that's going to help the economy, the market tanks. And that's exactly what happened here. And you can see after being up dramatically, we sold off here, rallied up here, and then just sold off hard. And you can see this dramatic, and I'm going to break out the trend tools as I always do here so we can actually get into this, folks. But you can see the dramatic fall here. This fall from this point up here, and look at that topping tail, by the way. Nice tail on the top right through two moving averages. It could not close above the 20 or the 50 moving average right there, and then off to the races on the downside it went. And you're talking about 10 straight red candles, so that's 10 straight 10-minute periods where the market went lower, okay, all the way down here. Now, at this point, remember, Options X was today, and a lot of times you get some crazy volatility up and down during Options X weeks. We did not see that this week. The bear market dictated here this week that we just went straight down. So anyone that had puts did very, very well in the course of this period here for Options X. And there was nothing that could be done. The market tried to rally multiple times yesterday and today and failed miserably every single time. Now, after we got this hard sell-off, and notice the volume, mornings of Options X day is always heavy, heavy volume. Then later in the day, volume lightens up, as you can see right here, including the fact that Monday is a holiday, the Martin Luther King Jr. holiday on Monday with the market being closed, so a lot of traders moved out early, went for a holiday, volume lightened up even in the afternoon. Now, overall, today was still an exceptionally heavy volume day. We did 3.2 million contracts today. That's a lot of volume. All right, so don't get me wrong, but my point here is in the afternoon the market tried to rally, it tried to break down, and look at this little, ultimately it just stayed in a trend. And I'm just going to draw these in quickly. You can see the trend, it stayed in between. Look at this. I mean, just zigzagging up and down, left and right, every which way here, ultimately staying in a tight range all afternoon. Now, we covered the reasons for the market up early, and that was, again, Bush's stimulus. Everyone was expecting big things from him on the stimulus. Plus, every day, guys, they're expecting a rate cut. I half expected too, to be honest. I am almost shocked that we haven't had a rate cut. And I say almost because, yeah, you know, you never know for sure. I can never say I am totally shocked because everything surprises me these days. Everything always has. But ultimately, the market expects it every day. And every day you're going to see the futures upticking a little bit early in the day. And when nothing comes, they sell off later in the day. That's what I believe. Not only was the Bush stimulus plan disappointing here, but this is also partly to blame. The fact that interest rates did not get cut. At this point, the market has already factored in a 50 basis point cut at the January 30th meeting. Now, not only that, but at this point, there's a 70% chance they believe that there'll be a 0.75 cut or a 75 basis point cut in the interest in the rate. Now, this is key again, guys, because remember, if this is what's built in and we don't get it or we just get it, that doesn't help the markets. You need to you have to exceed expectations to get a rally. So again, this is really shaping up to be one of the most interesting markets that I have seen in years. Now, the other thing I want to point out in this video is an interesting fact. And listen to this one. The beginning of the year at this point is the worst beginning of any year in U.S. stock market history. Go figure that one out, or go think about that one. So you guys we're seeing history, and in the chat room that I encourage everyone to come join, we talk about this. We talk about what's going on in the market. What's the underlying interesting things going here? Not only do we day trade, do we swing trade here and there, but we also talk about the underlying facets of this market, what to look for, technical analysis. So it's really beneficial. Come join the chat room. You're allowed to ask any questions you want. We try and handle as many questions as we can. But again, folks, this is the worst beginning to a stock market ever in U.S. history here since it existed, which is going back quite a ways. Now, let's talk a little bit about other things here. Let's talk a little bit more about technical analysis. Where are we going? Let's look at the the NASDAQ. Again, the NASDAQ closed lower. One thing today that is interesting, folks, and I want to point this out, and I'm going to go to the weekly chart so we can actually all look at it, is that the March low was broken today, but we did not close below it. So ultimately, I'm looking for this as to be some possible support here. All right? Let's draw that in there. There's a straight line. This is the March low. This is where we are. We hit it. We actually went below the March low, but we bounced back and closed above it. So the question now we have to ask ourselves is this a support area that we're going to bounce higher off of? All right? And it's very likely that it is. It's also likely that it's not. So we will have to see. Although what I do want to point out is you got a 3-bar surge now on the weekly. A lot of times you have a bounce after a 3-bar surge. So possible next week, and I do happen to... You know, I don't want to go out on a limb and say I'm saying that there will bounce next week, but there's got to be at some point here after such a dramatic fall an area where we do bounce. So I'm gonna shift the odds from a 50-50 of next week to slightly more for a bounce. Maybe a 60-40, not much, and again, it's not enough for me to put a lot of money at risk at all whatsoever, either way, short or long in this market, but I do think that there are some individual stocks out there that are insanely cheap compared to valuations, and if we should bounce, they'll do well as the markets here are a little oversold in the near term. Ultimately, you guys know how I feel, and I say this almost every video, ultimately we're going lower. The issues in this market are so bad right now. Aside from a major bailout by the government, and I'm not talking about them all giving us $800 in credit, tax credit. I'm talking about them bailing out some of these reinsurers. Some of these reinsurers like ABK, I believe that's it, and MBI, it will be a miracle if they do not go under, and should they go under, you will look for some major falls in the market. Now also, you also have the credit, the debt rating on these guys getting downgraded, which ultimately throws them into a turmoil and probably out of business anyway. So if that continues to happen, it's a huge deal. Keep close eye on this. Read up on articles. I'm sure there's plenty written about this, but it's a big deal if these reinsurers now take major hits. All right, and I'll just show you a couple. MBI, we'll show you that one quickly on the chart. This is the weekly. All right, look at this is the weekly. Look at that fall here. You're talking about a $60, $70 stock now worth $8.50. The ABK, and there's the weekly as well. This is when mid-2007 when it was trading at $90. $90 this stock was trading at, now trading at $6.20. It'll be a miracle if some of these don't go out of business, folks. It absolutely will. All right, so again, just to summarize here as we end this video today and into the long weekend, enjoy, have a wonderful weekend. I do think there's a slight chance of a bounce next week, although we are in a bear market now, it seems, guys. Every rally's being sold, and you can probably continue to do that, although I do expect a day or two upside coming soon. Possible rate cut next week, surprise rate cut. If it doesn't happen in the first day or two, they'll probably just wait till the meeting, and that's fine. But at this point, they have to overperform what the market expects for us to get any sort of bounce out of this. All right? Have a wonderful weekend, guys. Be safe. Those in the Sunday night chat, we're doing the Sunday night chat on Monday night because it's a holiday. Look on the website for that. Take care.